We're here to talk about geopolitics today, and that means a lot of things to so many of us. But fundamentally, it is talking about some seismic shift that's happening in the world outside. So the one thing that Kim and Catalina and Lisa have to do for us today is if we wander off topic and forget about fintech, they're going to pull us back. But our focus today is to say when all of these seismic things happen, and sometimes, very often, these are things that world leaders talk about. Why should we care about it? But the truth of the matter is we need to care about it because it comes down to affect us. When the gas prices increase at the pump, it does affect us. But there's a cascading effect that led to that gas price increasing. And that is a single example of what happens when there are large events happening outside our control. So, like with everything else that we do at FintechWomen, we may not give you all the answers, but what we can give you today is information to think, be better informed, better educated. So when you are faced with some of these discussions on how does it impact you, how does it impact your organization, your company, your family, you have more knowledge to take that forward. So with all of that, Viji, maybe we all know that fintech is something hard to define, but we have some kind of balanced understanding of what fintech is. What about geopolitics? How do you think of geopolitics?
So for me, geopolitics is really about between countries, right? So, there are lots of opportunities for geopolitics. So if you're a company, you're producing widgets in the US and you have a lot of competition, you look for opportunities outside of the US. And that's really geopolitics, where you could be exporting or importing to over, one or two countries. We've always known about political risk, right? Political risk is when you're only talking about within the country. The geopolitics is really about intra-country, right? I mean, we talk a lot about globalization, right? So I would say it's really there are lots of opportunities with globalization, geopolitics, the confluence of technology. Technology has expanded, so transformational technology, as Ken would say, and so all that, social change. More women in the workforce, women being better educated, and I would say all of those four factors have really helped fintech take off, right? It's like the chicken and the egg situation. Which came first? Did fintech drive technology and innovation, or did technology and innovation drive fintech? Did geopolitics drive technology innovation, or is it the other way around? Yeah. So really, I would say it's a congruence of those four. With everything, there are opportunities. Opportunities are more revenue. You can do things at a better cost centers. We now have IT teams in China and India and, if I may say so, Ukraine and Moldova. And so, we can take advantage of very educated staff in other countries to help us do some of the IT work that we do, right? So there are lots of opportunities, and countries can export to these places, and technology has kept ahead because we can now get our payments, from these. But there's a sting in the tail with everything else, right? So there are issues. So let's take COVID, for example, right? Or let's take the awful thing that's happening, between Russia and Ukraine right now, right? There's sanctions taking place against Russia, but so many countries depend on the oil that Russia exports, right? So we've sanctioned Russia, but let's say we and the US has sanctioned Russia. They cannot use the payment systems any longer. At least 7 large banks cannot use it. But Europe still depends on Russia for its oil consumption, right? COVID had already created an issue with oil pricing, right? So we thought it was going to be for a short period of time. Now there's a shortage of oil because we can't buy oil from Russia any longer, right? Though they haven't banned Russian oil just now, that is going to come along, right? I would say some of the things have actually helped fintech transformation. I would say COVID-19 has actually done a better job in accelerated technology for fintech than any other education has got better. But I would say banking, for example, has got a lot better with COVID-19 and actually been a little bit of an equalizer.
I think that's such an interesting point you make, because when we all went into the pandemic, we were unsure of what that's going to mean for so much of us. And you're right in saying it has helped FinTech quite a bit. But I'm also curious, when we were talking, and we were also in some of our prep calls, we're talking about some of the big events happening out there. You mentioned several of them. You mentioned the war between Ukraine and Russia at this time, the COVID. We spoke about the supply chain effect. It's a COVID effect on supply chain globally. And then there are also some of the longer-standing aspects of global mobility around ESG and such conversations that continue to happen. I guess the question, perhaps, before we start talking very specifically on FinTech and these areas is, are these, generally when you look at these events in the big scheme of the world, are these isolated events? Is there a butterfly effect? We could continue. And she smiles now.
I would say it's a complex, it depends on your point of view, right? It's like the chicken and egg, which came first, the technology. So I'll give you an example of how technology has helped, and FinTech has helped a lower income family in the US, right? So as a result of FinTech technology, we now have banks, new ankle biters that come out with low-cost products or no-fee products that the large banks cannot have anymore. Right. So you must have all seen the ads for chatting, right? There are other banks like Bank. Oh, by the way, I'm mentioning these brand names. I'm not recommending them, just so you know, or I'm not recommending that you invest in them. It's just examples, right? So I just want to kind of make that clear. So you have so many of these new banks that have come out that are low cost, no cost, right? And one of the claims that they make is a person who earns less than $100,000. And I know for some of the young people here sitting at the back, it's like, oh my God, 100,000 is a lot of money, right? I assure you in 10 years' time, you'll be earning a lot more than 100,000. But for anybody earning $100,000 a year, they can save $360 just by the fees if they go into one of the smaller banks and go into the larger banks, right? You now have apps that help you save, right? Something like Acorn, right? You have apps like Truebill and things like that help you control your subscription, so control your expenses. So you know well in advance what you have, right? So there's so many, but you will notice that most of the transformations that we're seeing are in the B2C, business to consumer market, rather than the business to business. But there's a trickle-down effect, because now the larger banks have to cope, right? Right. But there is, what they're taking advantage of inertia, right? Just last year, we paid $19 billion in overdraft fees, just in the US of A. And this is just consumer overdraft, all right? So while the smaller banks come in, it's going to help the situation, especially for the lower paid staff, right? If I can give you one more example, of course, right? I was reading an article about Atlantic Bank. Because of the technology that we use, we had the Paycheck Protection Program, which the Biden government had issued. And one of the issues are that minority businesses, African-American businesses, did not have access to the PPP scheme, right? The Atlantic Bank, within 3 weeks, set up a system whereby 7,000 organizations could get help for their particular businesses, a large majority of which was minority-owned, which did not take place when the last time we had such a scheme, which was way back during, right after the collapse of the, 2008 thing. So, I do think, so that's the advantage of the FinTech technology, right? That doesn't take away that it's a large group of people who are not computer literate, who do not know how to use these apps. But I am one from this group that thinks that fintech innovation will help and will make us more equal, and will allow people from below pay to take advantage of some of these things.
I think that's such a interesting point, because I think anywhere in the world these days, everybody's got a cell phone, right? It's an easy thing. People that may not speak languages can use apps, cannot speak English, but I can use the app, and I'll continue to use the app to send money to somebody, to get money to me and such. So absolutely, I think in terms of how technology has mobilized, and of course for us, particularly from a fintech perspective, money makes the world go round. So why not? It's probably more visible to us. I'm going to dive into a couple more questions, but before that, I just want to make an announcement for our friends online. Catalina is helping us monitor the chat. So if you have questions you would like to stop us, please either drop a note to in chat over here, and Catalina will pause and allow you to ask a question. Or if it's something that you want to wait towards the end of the call and then continue, we can do that as well. So since we're talking about, we have been talking so much about the financials for families in the US, I want to maybe flip into inflation. That's a conversation that's happening, right? And from a geopolitical standpoint, while we may think that this is happening in the US alone, or it's an economic challenge for the US alone, the impact of that is the cause and effect is exactly. Thank you. It is both, it's happening because of what's happening outside and then what's happening here, and then the results is here. So perhaps could you tell us first a little bit, talking about domestic inflation, but how events outside the country has caused it perhaps, and then talk a little bit about the technology aspects of it.
Sure. So, as well, all of us know that North America is going through, not just North America, most countries in the world are experiencing inflation, and that was expected because we all shut down, during COVID for the most part, right, for 2 years. And, a lot of the countries helped out by providing funds. And so there was always, knowledge that there's more cash in the economy, there's going to be slight amount of inflation, right? However, oil prices also were expected to go up. They did go up, and that was driving some of the inflation as well. Supply chain, which we talked about before, which is because of some of the COVID lockdowns, there were massive supply chain shortages, and that's driving up pricing as well, right? Remember how all of us ran and bought lots of toilet paper, right? And lots of cans. I think we still have cans of pasta, but we're never going to eat. I don't know why I did that, but anyway. So, we did all of that, and we bought lots of it. But now we don't have, automobiles did not sell during COVID. So people stopped demanding or stopped ordering for automobiles. Normally in the US, we would have 4 months or 5 months supply of automobiles. Now apparently they have only a month. And now a lot of the production sites in Europe were locked down, in China were locked down, in India were locked down, and therefore there's a short supply, and therefore pricing is going up, right? If I may say so, it doesn't matter which government was in power, we were going to go through this, right this bit. So the question is, how can fintech make things better? I think that was your question, right? Maybe I should have answered with all the things I just talked about. So absolutely, fintech innovation helps in the sense of you can compare pricing, right, of products across the board, go to the next best one. Your mortgage rates are going up as a result of interest rates going up to control the inflation. You look at what's the best way to change it. Right? So you have banks turning around and saying, we'll help you with a high interest rate, but you can now get banks coming out with new products to say, no, we'll give you your management fee, you can pay after 3 years. But it's a smaller online people who are doing that, right? They're not asking for credit checks any longer, but again, it's the smaller banks that are doing that. You know how they're doing that? Because it's all online. They're all using SaaS technology. The costs are lower. which the big banks cannot do. They do not take deposits in. I'm assuming you're all finance students, so you know why. So if you do not take deposits, the regulations that you are covered under North America are a lot lower. If you're just a lender, it's different. So you can get away with some of those things which large banks cannot do, right? That's why I would argue that fintech can really help to really, use some of the smaller banks, shift to some of these things. I'm not mentioning banks, right? Look at what is the best thing. But one of the problems with financial services is there's a lot of inertia of shifting, right? I've got my salary in my bank for the last 20 years. What are the chances I would change it to another bank, right? But those are the things that we as consumers need to get better at.
Yeah, I think it's an interesting point in so many different, or for so many different reasons. One, of course, as consumers, we are interested in that. But a lot of the folks that regularly attend our FintechWomen events are also entrepreneurs. And I think from an entrepreneurial standpoint, when money and funding gets to be difficult, they do want alternative sources of financing. And then something like this, of course, they can always go to the venture capitalists and such, but alternative sources, like what you just described, could also be that it's easily available, be of interest.
Can I just say, the investment by VCs and private equity firms in fintech is massive. I think there is more than $250 billion being invested in fintech technology. I know they would not be putting their money into the future there. So, and one of the large banks are also making some of those investments because they want to kind of buy them up. Because they know they're not as agile, nimble, right? Or as nimble, better word, than the smaller banks, right? So I was telling you, I gave you an example about Atlantic banks, right?
You did,
the one that set up. It took them 3 weeks to set up a system to enable people to borrow $2 billion of the PPP program. 3 weeks. I come from a company from which to clear a bug in my product would have taken me 6 months, right? To set up a new product, make it operational in 3 weeks. That's thanks to transformational technology that we have access to.
So I'm going to make a point that I know some people on the phone might be jumping at. Even though there's a lot of money in the venture capital world for fintech, women get a slight portion of that. That's a conversation for another session. So I see Gretchen on the call, for instance. Gretchen, we're holding on to that one for another session. But going back to, again, geopolitics, right? So we spoke about inflation, and you mentioned several of these aspects coming in. There's the supply chain effect and such, right? But there's another aspect that hits the common man as well as really large countries, the gas prices. And I want to now jump back to something we kind of touched on before, the Russian sanctions and what the effect of that is as a cascading effect. So once again, if you go over the same theme, we kind of talk a little bit about the geopolitical risk that's taking place right now, and then cascade that downwards. How are the sanctions, even when they were applied, what Swift did? Maybe touch on some of those points on something that is so much consuming the news waves now.
Sure, I'll try to. It's a complicated situation, right? So, looking at the horrific news that we see on a daily basis as to what Russia is doing to Ukraine, first of all, it's just terrible, right? So really my thoughts are with all of the families really suffering in Ukraine. It's just quite terrible. The different aspects, it's complicated because Russia is one of the largest exporters of gas. Sorry, I call it petrol, and we call it petrol. So, of gas, of fuel, and of gas, right? And Europe depends on it. China depends on it. India depends on it. And remember, one of our biggest suppliers, which was Iran, because we already have sanctions in place in Iran, most people switched to other countries, right? Because the US was not drilling for more oil, right? For whatever, for lots of reasons, right? Now the Biden administration is going to start supplying 80 million barrels of oil, but that's going to go away in 6 months. So unless we start drilling for more oil, and I'm not recommending that, I'm just saying, right? That we have concerns about climate change, and so we are kind of stop. What's going to happen? Oil prices are going to go up more and more, especially when all European countries have already declared that they're going to try to limit taking fuel from Russia. It's going to increase. The US is not going to give it away for free. It's true. They're going to charge for that, and therefore those countries will have to pay a higher amount for the oil than they were doing from Russia. And that will drive inflation up in Europe, which is what some of our bigger trading partners. And that will have a knock-on effect with trade that we do with Europe. So it's complicated, right? On the one hand, I fully support the sanctions, right? The second thing is the financial. So let's see what's working, right? What's working is the SWIFT payment. You know, I'm sure you know the 7 large banks and a lot of individuals have been banned from SWIFT. So SWIFT is this interpayment systems with 7,000 banking institutions around the world, right? In the old days, there would be, there would be a barter system. If I'm selling potatoes to a country, they would sell me tea, right? In Australia, yeah. Or they were selling me gold coins, right? Now, most of the trade is done in US dollar, it's done through SWIFT, and therefore the payment systems work there. Yeah. 7 of the largest banks have now been banned from using SWIFT, right? And therefore, as a result of that, they cannot make, so Russia now asks everybody to pay in rubles because they don't have access to US dollars, right? That is driving the Russian economy to a halt, and we are hoping that Putin will take, President Putin will take the steps to say that let's pull back and pull back on the sanctions. Correct. Yeah. And therefore the sanctions work, right? So that's what we are hoping is going to happen. What's wonderful is that we had the same sanctions by the Trump government done on Iran. But because they were built on legacy systems, it took them 7 months to make the sanctions work and not allow people to trade with Iran, right? But now, because the system had already been put in place, because of the sanctions with Iran, so technology, Fintech technology, helps us try to control what's happening in Russia.
I think it's I want to kind of maybe put a pin on that, that metrics you just said. When this happened, and sanctions were applied to Iran, it took 7 months, and this happened in a matter of days. I think it was 5 days or something, I forget it. But in a matter of days that these sanctions were applied, and banks could no longer do business with Russia. Even if you ignore the geopolitical impact, clearly there is that. Even if you ignore that for a second, there's a speed with which, in a matter of less than I think 6 years, that we could have this kind of a change in the system. It's phenomenal. So moving, or maybe continuing with that, but moving a little bit from there to the supply chain issues that we have been talking about. And there are 2 parts to this, right? So yes, we know that through the long tail of the pandemic and the long tail of the pandemic, there have been a number of issues hitting us, which is all fine. We all have the patience to live through it. Now, as the world is coming out of it and coming back to normal, as we are right now, China has imposed lockdown in Shanghai and the ports around it, and therefore now at this point, as the global economy is trying to recover, there's a serious supply chain issue and the cascading effect of that. Same kind of context, tell us your thoughts on that, and then also kind of the financial or fintech impact to it.
I think it's very similar to the oil situation. You know, we have supply chain issues at the moment, as we already discussed, right? There's a shortage of materials. There's a shortage of building materials. There's a shortage of furniture. Just about everything, right? And it's not just Russia, Ukraine as well. I don't know if you know 20% of the world's wheat comes from Ukraine, right? Sunflower oil. You know, there's a shortage of sunflower oil now because most of that, they're the biggest exporters of sunflower seeds, seeds and oil to the world. So, and a number of other things, like some of the pulses. And so when Ukraine is in war, they're not exporting stuff, right? And the same thing with Russia. So you have 2 major countries where their biggest exporting partners were in Europe. We have that issue, right? Secondly, we have already the delayed supply chain issues that we had as a result of the first and second rounds of COVID-19, right? Now we have China going into complete lockdown, and that too at some of the main manufacturing centers, including Shanghai, is in lockdown at the moment. So we're going to see this going on. If China had not been in lockdown, I would have said at least by the end of 2022 or the beginning of 2023, we probably, not me, experts say, right? We probably would have been some form of back to normal, right? But I do not think that that's going to continue, right? I didn't upgrade I love my phone, my iPhone, and I wanted to buy the new 5G iPhone when it was released last year, and I decided not to buy it. I was thinking to myself, I'll buy it next year, post-COVID, new processors, blah, blah, blah. Now I wish I'd bought the last one because I think everyone is going to have, especially the IT companies, Apple is one of them, Cisco is the other. They all have large manufacturing bases in China. So we are going to be impacted. And I think we're going to see the impact of that for quite some time. A lot of companies have found alternative manufacturing sources, but it's not that easy, right? We're talking about billions of phones that are being sold or billions of things that are being sold. It's going to take a little bit of time to adjust. Maybe that's an opportunity for American manufacturing to kind of take up some of the slack.
I think as you were talking about China and the manufacturing, Elon Musk came to mind because Tesla had a manufacturing unit and they could not, they had to pull back as well as part of the lockdown. And then he sold a whole bunch of cryptocurrency, which then had an interesting impact on cryptocurrency in the market there. But I'm not going to jump into that right now, unless you have a thought on cryptocurrency and what's happening in the markets right now.
Not really. I mean, I don't know enough about it to be dangerous. I think that's a question for Ken more than me.
Ken is smiling.
It's something that we have to get more involved in, especially as women, right? We tend to be fully behind the times when it comes to these kinds of investments. So I don't know if you know, but cryptocurrency is going to be part of the future, right? Fidelity has just come out with a statement saying that we can now invest our 401ks in cryptocurrencies. 10 years ago, we didn't even look at it. At least I didn't, right? Some of you lucky millionaires who put in some money in that are probably sitting on millions of cash right now, but sadly, I wasn't one of those. If you look at like Berkshire Hathaway and what he says, what they say, you've seen that even now they are anti-cryptocurrency. So it's such a controversial subject, right? So I really don't want to talk about it because I want to give the impression that I support it or don't support it, right?
So we'll leave that one for
should get to know more about it. So
for a future conversation as well then. Okay. So I want to then shift into something else that I mentioned in the earlier introduction, but we don't talk, when we talk about geopolitics, the top things that come to mind for all of us is everything we just spoke about. We spoke about the COVID situation, the pandemic situation, the supply chains, the big wars, and the big events, the seismic events happening across the world. But then I want to come back to ESG because it's kind of it's a horse that's been steady. But it's causing a lot of change across countries, how countries do business with each other, how corporations do business with other countries and such. So, and the connection between ESG and FinTech is kind of been established, but I'm wondering on two thoughts there. One is a little bit on your thoughts on where you see ESG and FinTech, but also in the light of all of these larger events happening, is ESG getting lost somewhere?
So I'm really excited about ESG and FinTech. So let me just start with that, right? So I'm sure you've heard of the term impact investing. Right? So let's just focus on climate, for example. So do you know that by the year 2025, they're expecting at least $1 trillion in green bonds? So what does green bonds mean? Right? Green bonds is bonds that are being set up by banks and other instruments that will only lend money to sustainable projects. At the moment, there's about 250 billion. Right. 5 years ago, there was hardly 10 billion, right? Not even 10 billion. So it's a growing market. That's because we as consumers, especially the younger generation, so I would say millennials and all of them, are really serious, are really very serious about where the money is being used, right? So I'm not going to go into how, what that means, etc. But a lot of governments are coming out with net zero targets, right? So the pension fund, for example, in Japan, you asked, in the chat question. I was trying to be as US focused as possible, but Japan has the largest pension fund in the world, okay? Because everybody uses that pension fund, right? At the moment, they have a requirement that anything that they invest, more than $3 trillion in their pension fund, right? Anything that they invest has to be done in a sustainable way. They will not give money to fossil fuel, tobacco, defense companies, for example, right? I'm not saying that's right or wrong. I'm just telling you what they are doing, right? But there are banks within the US, Amalgamation Bank is one of them, that has taken the same step to say that we will only use our money that we will not invest our money into fossil fuel. And so any deposits that you pay us and any lending that we do, we will only do to sustainable. The credit card companies, where I can offset my carbon out, footprints and make myself zero impact, right? Because the fees that these carbon zero credit cards will be used in sustainable projects, right? So there's a huge interest. So all the major banks in the US have built an alliance to say that they're going to be net zero by 2050. So I think FinTech has a huge role to play, and they've already started playing it. I think the Biden government is going to come out with, with some standards that they will expect us to follow. But I say us, I mean the financial services. I'm so sorry. The financial services in America to follow. Europe already has it, and China has it now. China was well ahead of its time, right? China has already declared that by 2050 they will be net zero. In fact, I think they've come out with a rule saying it's going to be 2030. I don't think they will hit that, but certainly 2050 is very aggressive. Very aggressive, yeah. So you can see that once these governments come up with these targets, the sustainable development goals, it makes us all follow, right? So in the US, a lot of the major banks, even though the government has not come up with these goals, are already working towards it, which is why they've already made these. So I think it's very much happening thing. I come from the information services world that supports the fintech industry. And I would say that there's huge opportunity, right, in supporting, teaching companies how to be net zero, talking about the TCFD aims, how to get to it. So fintech can do so much over here.
So I was actually going to go somewhere else, but you said something that I want to step away from our conversation on geopolitics for a minute and just talk generally, because you've been hinting at this all the way through, that this fintech is like, while we know that fintech is a broad term, there are many technologies underneath it and such, that you've been hinting that there's so much opportunity, particularly because of all these events happening across the globe for fintech. Could you look ahead a little bit for us and say, where do you see fintech going? Talk a bit about Asian trends? Trends, yes, why not?
So there are three things. I think there are three things. This is just not my view, this is the view of the industry. So I think technology, the ones like we are already using, like cloud and SaaS, over the next 5 years are going to have major impact on fintech, right? Blockchain, which Professor Ken can talk about much better than I can, is going to have a huge impact on security, reliance, because one of the upsides of all of this fintech also comes with some downsides, right? We want to ensure that the money is not being used by terrorist organizations or it's not being used for money laundering. Therefore, security becomes very important, and I think blockchain can allow that, right? all of the NFTs, all of you know NFTs that are being sold right now, you know how they make these codes and only are being sold right now, so that on blockchain, right? Fundraising, sorry, what's the gentleman's name who died 2 years ago? You know that George, what's his name? George Floyd. Yeah. George Floyd, of course. He died 2 years ago. There's a major fundraising for him, right? It's going to start on April 28th, and they're selling 10,000 NFT art pieces. I've never seen that before. So it'll be good to see whether that's going to be successful or not. Fundraising through NFT, I've never seen that, right? So I just think technology is going to drive, you know, a new technology is going to drive. Over the next 5 years, I think the landscape will look very different, right? The second thing to me, I think, is AI, right? AI is going to be a big change, right? It's going to be, like some people have said, AI is going to be like human beings discovering fire, right? Or inventing the wheel, right? AI already has implications for us, I think, over the next 10 years, especially the confluence of data and AI. So even in a small way, you can see companies taking advantage of it, right? The third, I would say, is as a result of technology and fintech, I think business models will change, right? You will see banks becoming more like platforms. You know, when I was talking about AI, let me just give you an example, right? So I was talking to a very smart SaaS-based company where all the founders are about 12 years old, right? Very young, very, I mean, so sharp, so bright. You know, when you meet people like that, you know there's hope for the future, right? And they have got this algorithm differently, you know, based from all of Israel and from the intelligence community. But now they've kind of taken that and made that into a business case and already $250 million big. And they work with the B2C, so with the B2B. So what they do is, you know how we use our credit cards online, and sometimes you have to give up your whole family history before you can buy something, right? That's to ensure that you are who you say you are in your security protocols. They've taken all those security protocols and they guarantee the customer. So if the customer at the moment has 80% of all online transactions go directly, they guarantee that they could pass 90%. And they take a cut from the 10% improvement. The company does not pay in advance. I've never seen that with this. That business model I've never seen. I can tell you, I've worked for more than 30 years. I've not seen that business model before. I was amazed. And they are a growing, they're already $250 million big in 2 years.
I think, can we just touch on that a little, because I think there's a business aspect to all of that, which is so interesting. So when you talk about business model, my head immediately went to saying, oh, the standard operating procedures of a company is going to change. But you're not talking about that. You're talking about fundamentally changing how companies do business with consumers and how companies do business with each other.
Correct. I also think that there's going to be a change, a fundamental change. Like, for example, I saw this wonderful case study. I think that somebody from your team sent me about Walt Disney, right? The Disney parks have a relationship with their banks, their local bank, and they built a platform for Walt Disney. So anybody being on their site, which is created by the bank, not Walt Disney. So they've taken over the whole thing for Walt Disney. And anybody going to one of those things called, you know, theme parks, right? Theme parks. My son is 23 years old. The last time he went to a theme park was, I don't know, maybe 15 years ago or 18 years ago, something like that. Anyway, so so they've taken over the whole platform. They have educational things for the children, coupons from local places. They've built the whole thing for Walt Disney, right? They are claiming that they get $2 billion of additional deposits per month as a result of doing that, and that they have 1,700 additional users every month.
You know, what's interesting is the concept of risk seems to have changed, because that's a very risk-averse thing for a vendor to do for a client. You know, why would I take on the risk of building and managing? It used to be, not so long ago, that you pay me and I'll bill you something. And now it seems like, to your point on business models, that thinking is shifting, where the vendor or the bank in this case is building out technology and then giving that technology or taking a cut of that technology as their revenue.
So the bank is creating a platform, right? So they're interlinked with their customers so much. I mean, look at it from the bank's point of view. One they can never walk away, right? Without it costing them a lot of money.
Sure.
So they're within the ecosystem of the company. And I think it's a great move on both.
It's highly sticky for everybody.
And technology enables us to do that.
Yeah. Just doing a quick time check, and perhaps what if you folks have your questions, have them ready, because in about 2 or 3 minutes we're going to jump into those. But then perhaps to close out our conversation for today, Viji, could you tell us a little bit? We're FintechWomen, so we like to usually end our sessions with saying, what are the opportunities for women? What can women do more and better? So with your broad experience, as well as through a fintech lens, all of it together, what's your advice for women?
I would say first build an ecosystem, right?
Yeah.
And the ecosystem doesn't have to be, I don't know if I'm allowed to say this, does not need to be only women.
Oh, absolutely. You can absolutely say that, because as Ken will attest to this, we think we cannot do any movement, any change without our allies and our supporters. So absolutely.
And that's a lovely thing to say, right? I mean, I can tell you that most of my mentors and sponsors happen to be men, right? Because I grew up working in an environment where it just happened to be that most very male dominated, right? I hope my mother's not watching, but there was a time when I started smoking just so I could be with the boys. Right? Ma, I've given up smoking. Don't worry, 20 years. So, so I would say build an ecosystem. And it doesn't have to be fintech related, right? Because, and that's I think an important thing. And you don't have to be 40 or 50 to build an ecosystem. Start when you're 18 or 19. Keep in touch. LinkedIn is a beautiful thing, right? Keep in touch, right, with your professors. Keep in touch with other people, because you can really support each other and help each other, right? Keep ahead of technology, right? Read about it. When I look back at my career, I had professional ADHD, so while I changed jobs every 3-4 years, I stayed in the same company for 22, 25 years. So you get used to doing things in a certain way. I hope I'm not being controversial when I say, look outside, right? Technology is changing at a phenomenal rate, right? So take advantage of the changes that are happening outside in the environment, right? And, get ahead of it. Take some risks with your career, right? Sometimes I think if I had not been so happy in this company that I worked for in over 20 years, I may have shifted out a lot sooner, right? So do it even if you're happy. I love the company I worked for over 22 years, right? That was Thomson Reuters, where she and I met. Because they gave me opportunities that, like I moved countries, I moved jobs internally, it was a $10 million company. So, but I really think now looking back, why didn't I join a small startup, right? I could have done things differently. If you can, take a little bit of a risk, both with your career and with what you do. Right? I don't believe that women are not good networkers. I network well, I know geography. So, but what I think we don't do well, and I think even men don't do well, sometimes we don't know how to utilize our network.
That's a good point.
Right?
Very good point.
It's not just we don't have friends. Like I've heard so many people tell me, "Oh God, I don't know how to use my, and I don't have a good network." Because sometimes when I have some sessions for people who are looking for new jobs, and I'm a salesperson. Right? Did you guess that? So I say that normally if you're looking for a senior level jobs, you should have need 100 contacts. There'll be 10 serious discussions, 3 offers, you take 1 offer.
The sales funnel.
It's a sales funnel,
yes.
Right? And they'll say, oh my God, I don't know 100 people. So look at your LinkedIn contacts. You have 1,000 people. Don't tell me you can't meet 100 people, right? So I'm not saying you should build a network to find a job. Build a network because sometimes it's interesting just to have a conversation. Javedi and I kind of met every 3 months, I would say 4 months,
yeah.
right? We just met to have a coffee or to have lunch, not because we wanted anything from each other, right? And she asked me to come for this, and of course I owed her, and I said, sure, that's,
You didn't owe me, but I'm glad you did.
Let's do this. So
I think that's a great point. The point that you don't meet people when you need something from them. You build a relationship regardless because you like something that they do, and then through that you sustain a relationship that can help you during hard times.
And if you are once some of the Gen Z millennials in the room or online, it is expected that your kinds of work that you do will change at least 5 times in your working career. So you yourself have to stay ahead of it, right? The one thing I didn't tell myself, but I should have learned better, but I'm doing better at it, is have a work-life balance. Right? I could have done a better job of that. Right? So I would say, from personal experience, have a better work-life balance. Go on holidays, see the world. Even if you're not interested in traveling, take a break. Right? It's all right. Take a break. Don't fall in love with the company you work in. My mistake. I've always fallen in love with the company. Because that gives you the opportunity of looking elsewhere and seeing what else there is. It's a happening. Fintech is really a happening place to be. If you're in Fintech, it's the place to be. And take advantage of the changes that are going to take place.
That's a lot of good advice. Thank you. Maybe I'll open it up for questions. Anybody in the room? And Catalina, I don't know what you've been getting online.
We do have a question from Gretchen. Gretchen, I don't know if you want to ask it yourself since you are online as well. If not, I'm happy to read it out.
No, I am happy to ask the question. So going back to the example that you had brought up where the banks had built the platform for Disney, I'm just curious, as you've worked in large companies, and I'm just curious as to why you think that they can seem to innovate when they're doing it for Disney, but they can't seem to innovate to do it for a larger or a broader customer base, for instance, those that the fintechs are serving. So I'm just curious as to what your thought is on why there's such a lack of innovation capabilities.
I think it's the legacy system, technical debt, right? So, and that's one of the points I wanted to make, actually. And Gretchen, thank you. That's a great question. I do believe that a lot of the older banks and older financial systems all have legacy systems. It's going to take us all. I mean, I used to work for a large organization, and I can tell you that we have legacy systems and you've heard the term technical debt. Technical debt is really where we say, okay, we'll do the minimum technology work that we need to do, and we'll come back later and make the fixes that we have to make and then launch the product, right? But we never do, right? We never come back, and therefore a small ankle biter can come in, especially if they're on a SaaS or on cloud, and make changes and be more nimble than the larger organization. That's number one. Number two is, a smaller organization has 5 customers and they can change things for those 5 customers. I may have 25,000 customers, and though only 20% are making 80% of my revenue, I'm like, oh, I don't want to, spoil that because I'm a $20 billion bank and I cannot change that. So that are some of the problems that face larger banks. So I don't know if you saw the recent announcement by, I think, was it JP Morgan, who came up with saying that they're going to have smaller units who are going to work like startups, right? So they're going to have thousands of CEOs within JP Morgan, and they're all going to be given investment, and they're all going to behave like small startups. I think that's a brilliant idea. It may not work, but I think it's a good risk to take.
Yeah, I think that's interesting. And then Gretchen, I like the question also because why did it work for Walt Disney, right? That was the second half of the question. And I dare say, I'm curious about this and I'll do my own research. But I'm willing to bet that they didn't do it overnight. It probably took several months or maybe a couple of years to build the system that they're getting. That today is getting them a steady revenue growth. Any other questions? Yes.
Following up on that question.
Yes.
Where the banks being so regulated and fintechs not being regulated so far, or not facing the same level of regulation, as that regulation catches up, do you see that regulation catching up sooner rather than later? And when that does happen, will that level the playing field? Will that hamper innovation in the fintechs?
Great question. So I'm just going to repeat the question, so in case other people didn't hear it. Some of the questions asked, the question asked was, the larger banks have more regulations, and so the smaller startups who may not have that much of regulation. So you're right. We're well behind in terms of regulation when it comes to the smaller fintech, right? But that's working to their advantage. So as long as they are nimble in terms of not taking deposits, but just doing the lending stage, they will, I think, still be ahead of the curve because there is no regulation when it comes to just lending. The second bit is, I do think the larger banks are also partnering with some of these startups. Therefore, they can take advantage of some of the nimbleness, is that a word? That the smaller things will do, right? It's always the case, right? I mean, let's take Uber. When Uber first started, there was no regulation, right? Because it was so new and exciting and everything else, and now you have, unionization trying to happen, like in London, and Germany does not allow Uber, for example. So there are implications for all of these. Time will take it up, but then something else will come along where things will change. So you're right, some of us have to get into it, at the start of it, rather than, when the product phases, towards the decline of the product development phase. I would agree with that.
And?
Well, you realize I have to ask you a crypto question. No, actually,
you have to answer the question yourself.
Well, no, it's actually, there are over 90 countries that are studying issuing the central bank digital currency, right? So I was wondering what you thought, and China has already beta tested one, and they used it in the Olympics. I was just wondering what you thought, what the impact systemically could be in terms of issuing central bank digital currency.
Wow, it's a good question, and I really don't have an answer to that question, right? Because I don't know cryptocurrencies that well. By the way, there's a Professor Ken asking a question about how countries themselves are coming up with cryptocurrencies. So my answer to that question is that more number of countries have come out with. I think the US will have to lead the way, right? One of the issues with cryptocurrency coming out is that it should not. I'm putting my US hat on, my US passport on, is because the US dollar is the strong currency. All other countries go around it. So I think for our sake, I hope the US dollar continues to be strong, right? Because if some of the local cryptocurrencies take precedence, some of our trading power, should we say, it's going to take some time. It's not going to happen overnight. It's probably going to be in the next 50 years that might come up. It's in China's interest to come up with a cryptocurrency, right? Because of their dependence on the US dollar. So I would say that, there are lots of countries, like India has banned cryptocurrencies, for example, right? So other countries have come out with it, but we have to see. It's like what do we call it, the system, not STEM, for exchanging payments we just talked about, SWIFT, right? China's come out with its own SWIFT system, right? It's not very effective. Russia's come out with its own SWIFT system, all because they don't want the dependence on it's not a US, SWIFT is not a US-based system, it's based out of Brussels, I think. But it's kind of, US and Europe kind of EU kind of control the rules and regulations of SWIFT. So China and Russia have come up with their own systems. So they're ineffective because they have like 250 instruments being exchanged to those systems compared to 7,000 through SWIFT. Right? It's like that. If the cryptocurrency gets picked up by some of their trading partners, it's a huge advantage to them because then it weakens the power of the dollar. But as long as the US dollar is the main form of currency, shall we say, then I don't see a threat right now. But I don't think cryptocurrency is ever going to be abused, and I'm proved wrong. So
Yes, Abu, please.
I have a question that's really related to geopolitics. Given all of the institutions that have been developed in the Western world, the big banks, the SWIFT, and all of those things, thinking, in the future, not near future, maybe the long term, when the smaller players, they could replicate some of it. Maybe they can come up with a system that's probably not as dominant or as complex as SWIFT, but workable. Would that make the world less safe in the sense that the rogue nations, they could say, "Oh, I don't care about the U.S. anymore. I don't care what they think. I'm going to go in my way." So, do you think it's going to create more stability, or is it just going to create a more unstable world?
That's such a great question. So, for our folks online, if you didn't hear Professor Abu's question, the question is this. I'm going to paraphrase it very quickly. That there's a lot of we've been talking about geopolitics from the standpoint of things are happening in the world and the big banks and big financial institutions are here. But what if we flip this around and say innovation in the not so distant future, perhaps a distant future, innovation has normalized or standardized the ability for any country, any territory out there to have the same level of technology-driven financial institutions. And does that, or could that give rogue nations the ability to say, I don't care about the US dollar and my currency is not pegged, I can do my own thing. And therefore, will it create more instability globally across economies? Did I do a good job?
Yes.
Okay, thank you. So, Viji, what do you think?
So I'm going to answer that slightly differently, right? So as long as it's to the same answer that I had for Professor Kerr, as long as the US dollar is the major currency that we are all trading with, I think the chances of that happening are a little low. Where I think the risk is technology innovation, right? If somebody, I won't say rogue nation, I would say in any other country, why is there so much investment in education in developing countries, right? Because we are all trying to find the next Bill Gates or Zuckerberg or somebody like that, right? I don't know if you know, India has the largest amount of startups in the world, more than the US, right? And the Indian government is funding a lot of those startups, right? And a lot of them are to do with climate change. China has the biggest investment of R&D in the world, right? Actually, Israel is the highest. The second highest is China, right? 5% of their total budget goes into R&D. And it is to find solutions to climate change, find solutions to some of the things that they're doing. So I think that is the risk, right? I know we walked away from fintech a little bit. So, but at the end, it will all come back to fintech because we have to find a way to pay it, right? We can't have barrels of gold coins being moved across, right? So I think the next is technology innovation is the equalizer between countries, right? So if you have countries, like even in say Sweden, right? Sweden comes out with the next big thing. They're not a rogue nation, right? But you will see the balance of power could change as a result of some technology solution coming up, right? So suppose Sweden comes out with an energy battery from something that's only they have the patent for. They have an advantage over the rest of the countries because then their dependence on fossil fuels is zero. Right? Isn't there a small company in Boston that claims that they have found an energy source through copper? Right? And guess who's invested the most amount of money in that? Bill Gates and Amazon. Right? They have invested the most into that startup in Boston, by the way. So there are companies like this all over the world. There's a lot of investment. There's a lot of availability of investment to try to find the next big revolution. And I think that's the risk.
Fantastic. So a quick check online. Are there any other questions, Catalina?
No other questions right now, Jagati. So we can.
Thank you. So I will then bring our session to a close. And Viji is going to stay back here. And if folks online want to connect, Viji, they can connect with you on LinkedIn.
Please do. Yeah.
It's Viji Krishnan. Everybody's got her name. You can find her on LinkedIn. Just remind Viji that you met her or you heard her at FintechWomen, so the connection is instantaneous. But Viji, thank you so much. We went all around the world and we came back to Boston. So I don't know how you managed that. You closed it out with Boston here. So thank you for coming. Thank you for joining us. Thank you to Suffolk University for hosting us. You folks are such phenomenal partners. And to everybody, go forth and I should say this. Today's the 4th, isn't it? May the 4th be with you. Everybody, thank you for joining us. Good night.